In 2018, I think the mining investment scene is going to move a long way further into the boom. We've been in a boom since roughly January 2016. We slipped out of a very long bust, and after such a long drought, we saw a lot of investors piling back in on things that were quite cheap. Now, we've progressed right through so that prices have increased, money has been raised, and exploration has restarted. So I think the industry is really reinvigorating, and 2018 looks like it's going to be quite an exciting year. Probably one of the best parts of the cycle to be set and invested and involved in mining, because that's when things start to happen and investors start to provide rewards. So it looks like being quite an exciting year. The types of projects that investors are interested in at the moment, gold is a big one. Anything that provides inputs to producing batteries are also of a great deal of interest, although those two spaces don't share a lot in common. Gold is something which people have been investing in for many, many years, and I'd say is reasonably well understood by the investment market. The battery space, on the other hand, it's speculative, it's very interesting, but I don't think too many people understand yet what a company that provides battery metals or battery products, battery commodities is going to look like. So there's not many of them around. There's a lot they're exploring, and some very exciting discoveries and developments taking place. So we'll probably see those come to fruition over the next 2 or 3 years and understand how exciting those companies will be as producers as well. Private equity is something which dives pretty deep when it does due diligence, which is necessary when you want to hold so much of a company. So for that reason, they can often take quite a bit of time to get set in something, and the process, you have to work quite hard from the private equity side of investment to make sure that you're not left out of something that you feel is somewhere where you really want to be but need to finish a process. So that's the risk as we go into a more exciting part of the boom, is where companies can invite investors who have a much shorter fuse, can make decisions on much shorter time frames, which might leave private equity out. Now, that's my view. Some of the other guys probably manage their situations in differing ways as well. If there's something which is of interest to you, you do try to stay well ahead of the market and get yourself prepared so that when they do come out with an update and a fundraising, you can get your head around it quickly and participate. But I think that's probably something which would rule private equity out from being mainstream in a lot of things. But having said that, private equity tends to pick projects to stick with for a long period of time, and they tend to get the ones they want sooner or later. I think for it to become mainstream, it is almost the only source of equity finance during a bust. So for the last 5 years, private equity firms have been selecting things and getting set in a lot of them. So, there's an investment phase and then there's a performance phase that has to play out in a lot of these situations. So I suppose the other half of that question is, are a few of them prepared to sit back on their haunches now and go through the management of what they've already got? But for it to become mainstream, I think you'd need to see conditions weaken in the equity market for that financing to fall back towards the private equity guys more thoroughly. IMARC's a gathering of a lot of the mining types around Melbourne, and a lot of people come globally to attend it. So it's a great meeting place of the industry, and it's somewhere where retail investors can mix with those people. A lot of other conferences, it's either hard for them to get access to it or to find out about it in the first place. So IMARC tends to combine all of those things.